What's up, everybody? This is YouTube Live. We are live here, Everything Phoenix, on this Monday morning or afternoon, I should say. It is a beautiful day. It's hot. It's summertime, the dead of summer for Phoenix. And I couldn't be more happier about being here, right? Because you know what? You got to be happy about where you're at. You're the only one in control of that. So if you're not happy about your situation, I don't know who else will be. And by the way, Phoenix has two seasons. I say it all the time: awesomeness, pure awesomeness. And then, of course, the second one, which is hot. And it is hot right now. It's summertime. It is July 1st, and it is hot in Phoenix. That's okay. We're going to make the most of it. We're going to stay indoors as much as we can, obviously. But going outside, you just kind of deal with it. Our kids have practices still, and people still play golf, but it's hot. There's no way around it. So we're going to talk about the housing market because it's not so hot on that here in Phoenix today, and insurance issues, affordability issues, all these issues that are surrounding all the headwinds of the marketplace, or I should say tailwinds, because right now, no headwinds. Right now, we're facing some strong wind coming into our face right now. And will the housing market survive? We'll see. But where's it going to go? It's going to survive, but where's it going to go over the next several months? We're going to look at that and on more, and even some development stuff, because we're going to hit that as well. You know, we do that. But at first, if you don't mind just commenting on anything, asking a question, this is a two-way street, and we love to hear your thoughts on what we're talking about here today on Everything Phoenix YouTube Live. So we're going to dive right in. I'm going to share my screen like I always do, and we're going to just jump into the affordability issues of the housing market and what in the world is going on. So let's dive right in. Here we go. All right. So the affordability crunch, this article from the Phoenix Business Journal, says it has homeowners staying put despite inventory increase. Okay. So here it's talking about the lock-in effect. What is the lock-in effect? Well, it's pretty obvious, I think, to most people what that is. I think you can get a good idea for what that means, but people are staying in their houses. There's not as much inventory, or is there? There's becoming more and more inventory on the market. That is true. We're going to dive into the numbers so that you guys are, again, fully informed. Not my opinion, just the data. I'm getting a lot of comments. I love comments, guys. So please comment below, even on the replay. But I get comments here saying this guy's just realtor hype. He's just talking about, everything being rosy, and it's not that way. And he just wants to sell houses because he's just, some kind of sleazy realtor. I am not actually. I'm actually just trying to give you the facts. Matter of fact, if I had anything I ascertain, I preface it by saying it's just my opinion. I could be wrong, or I provide a source. Phoenix Business Journal. I love that. I love the Cromford Report. We love CNBC Business. All right. We love Mortgage News Daily. We like Newsweek. We like all these sources that, by the way, they're not always right either. But if it's an opinion, it's one thing. If it's data, it's a whole nother thing. And it's hard to go against the data. Now, you may not like the interpretation of data. You may want to interpret it another way, which is totally your obviously option to do, but it's still data. And what's great about data is it takes the emotion out of it. So we're going to jump into here, and we're going to talk about and keep reading this article about the lock-in effect. Now, many housing economists right here, they predict that 2024 would see more relief for homeowners by way of greater inventory. Households more willing to sell their homes after being tethered to record low mortgage rates during the COVID-19 pandemic. However, that's not happening. People are sitting tight. Why? Because rates are high. Where are rates? Let's look at it real quick. Mortgage News Daily, you can see it right here. The rates are at 7.14 for a 30-year fixed today. 15 years at a 6.49. That's a little better. And then you have your FHA and VA rates, which are in the sixes, which is great. Now, again, this is top tier credit. This is the grade A paper, if you will, right? If you have other issues, there's what's called loan level adjustment pricing on these things, which causes, in some cases, the rates to go up based off that number right there. So talk to your favorite loan officer. Don't just go off what the internet says, because typically they're going to give you just the best number for the top person with the best credit and the least amount of debt. Okay. Now back to the article, because this is interesting. Okay. Well, we'll get to that in a second. Spoiler alert, right? Okay, so we're coming down here, lock-in effect. What are they saying? They're saying no one's leaving, everyone's staying put, and what's happening? But here you go. But Walsh said some markets saw their home price accelerate, their growth accelerate more than other markets such as Austin, Texas, and Phoenix. But they're now seeing declines in some of the home prices. This is true. Some markets seeing The biggest surges in inventory, especially in Florida, saw significant price cuts over the past year. Nationally, home prices are still rising and are widely expected to continue to do so. That's interesting. Moody's is expecting home prices to grow about 2% in 2024, a more modest gain compared to the recent years below of growth nonetheless. So let's look at Phoenix, right? Who cares what he says about the national side to an extent, right? It all is connected to an extent. But in Phoenix, what is happening? Well, you can see right here, the Cromford report, you have active listings. We're up to 21,162, guys. That's a lot more inventory. So as this guy in this article said, nationally, you're not seeing inventory going up as much. Why? Because you have the lock-in effect of people not wanting to move. But in Phoenix, last month we had 21,201. Today we have 21,162. Last quarter, 20,500. Guys, last year, look at this. Look at this. Last year at this time, we were at 14,693. Today we're at 21,162. That is a huge increase. I mean, that's somewhere in the ballpark of, well over 25% of increase of inventory on the market. Now, you have that going on, which typically you would say that's going to bring down the prices. Well, it hasn't done that. They haven't shot up either. We look at the median because median's where it's at, guys. Median takes into consideration the broad spectrum of the pricing when it comes to a multi-million-dollar mansion to a lower level home. Okay, the median price on the annual sales side right here is $440,000 in Maricopa County. That yellow mark means it's even. As you can see right here, it was $440,000 last month, but it was $435,000 just last quarter, and last year it was at $430,000, and then it went up to $440,000. So even though inventory has remained set relatively somewhat low, now it's starting to increase, of course, the demand has also stayed low, but yet it's taken longer to sell homes. Pricing remains the same at $440,000. I do anticipate for everyone out there who's hating, saying that can't be right, it's got to go down. Well, if you're a naysayer, there's always going to be the naysayers and the more optimistic people on both sides of the spectrum. I'm not trying to be either one of those. I'm just letting you know that you're probably right in that trend is going to probably continue. And you saw the median price point go up, 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 even though the signs were like, well, should it really be? And now you're probably going to see it turn and see that median price point start to adjust and start to head back down towards that $435,000 mark and maybe even the $430,000 mark from where it currently sits today at $440,000. What do you think? Think it's going to go up, down, stay the same? I'd love to hear your comments, your thoughts. Let me know, and we'll get a conversation going. I will not take offense if you blow me up and call me a liar. That's okay. If you're having a bad day, I'm going to have a good day regardless. But I still like to hear what you have to think, because this country, this channel is all built upon different opinions, right? Not everyone is correct all the time. That is for sure. And so your opinion might be something that other people are thinking that they want to hear too. So throw it out there. I'd love to hear good, bad, or ugly, whatever it may be. Throw it on there and we'll talk about it. Okay. But you see the data right here. I'm going to go back to my screen and let's dive right back in. All right. So that's the data right there. Days on market, you can see real quick. I want to share with you guys for sales are up 1 day from last month. But last year was 66 days, equal to today. So it's interesting. It feels like it's taking longer, and it is in some cases, in some markets, some micro markets. But overall, in Maricopa County, it's about the same. All right. Now, what's one of the reasons affordability continues to remain high? There you go. Rising home insurance costs are challenging would-be buyers. This is true, guys. This is very true. Unfortunately, this is not going away anytime soon. This is causing all kinds of problems to the housing market. The housing market's already challenged because the rates are so high in terms of affordability. And now you're going to have your monthly payment be even higher because insurance rates are going up. Now, again, when you get financing, insurance is not even an option. Believe it or not, there are some people who own a bunch of houses. I know several, and they own free and clear, and they choose not to have insurance on any of them. Why? Well, because it's a math equation for them. If the chances are, if they do lose one, it will be just one, not 3 or 4 at a time, because they're in different parts of the country. And if one goes down, then over time, based upon the cost of insurance on a monthly basis, he has it all figured out, right? So that's a whole nother conversation, maybe a whole nother YouTube live video, but not for today. But insurance is going up, guys. And if you have a loan, you don't have a choice. You have to have insurance because the lender will require it to protect their asset, of course, their equity stake of the asset. So rising home insurance costs are putting the pinch, on the home buyers. About 72% of U.S. homeowners said their policy premiums have increased over the past year. That's a lot. That's crazy. Furthermore, here's the shocking part. 8% of those surveyed said their insurance company stopped offering coverage for their home, and another 9% of homeowners said they are worried that their insurer may stop offering the coverage altogether. That's not good. So, will homeowners insurance rates continue to rise? And according to this marketplace, Insurify Incorporated, they say 6% will rise in 2024 after roughly a 20% annual rate increase every single year for the years of 21, 22, and 23. Guys, that's a lot. Bringing the average annual homeowners insurance cost to $2,522 annually by the end of the year. That's a lot. I don't care where you're at. That's a lot. But there's obviously certain states that are more of an issue than others. Florida is one of them, right? They have the highest pace for insurance at $10,996, followed by Louisiana and Oklahoma, and then Texas. Guys, California didn't even make the top 4 here, which is interesting. But you do have tornadoes in Oklahoma and Texas, more so than it seems other parts of the country. And then in Louisiana, you have the flooding. They're probably still paying for trying to recoup the losses from all the hurricanes in the past decade or a couple decades, actually. So why are home insurance costs rising? Well, for those 3 reasons we just said. For one, insurance companies are being more selective with both new policies and renewals. That's especially true in coastal states. There you have it, California and Florida. Recently, State Farm, guys, said it wouldn't renew 72,000 homeowners insurance and commercial apartment policies, a cut of about 3% of its policies in California alone. Okay. And Farmers is doing the same thing, AAA, etc. But this is interesting, guys. When will this end? We don't know. There's no end in sight right now. But the good news is it went from 20% annual every single year recently to 6% as the expected rise of insurance cost for 2024. So maybe that's a good sign. 20% down to 6, and then hopefully down to like something more manageable, like 3 or 2. But with inflation, everything rises, including insurance, guys. It's no different. So inflation obviously is not helping this cause at all. Okay. So it says right here, between home price appreciation and mortgage rates, housing was already unaffordable in a number of metro areas, especially for first-time home buyers. And now with the uptick of insurance costs going up, it's not helping. Okay. So this is not good. Not good overall. So I'm trying to deliver you some good news, but I got to give you the facts. And those are the facts right now of what's happening in the marketplace, not just in Phoenix, but across America. All right, here are the new hotspots for future Valley home construction. Hint, keep driving. In other words, it's on the outskirts of the Valley, which is where most new home construction is occurring in most major cities, right? But where is this map at? This is in the East Valley, and this is out in the Santan Valley area, Queen Creek area, where they are putting up a lot of new housing, guys. So what this article is saying is that KB Home and many other builders are jumping in to buy big parcels of land to continue to build in the Phoenix area. So that is, this article is going on to say that it becomes very bullish. Home builders are very bullish on the future housing market. Now, does that mean that home builders think that the housing market may not go down at all in the next year, let's say? I don't think so. No, I think it very well could. And I don't think they're saying that either, but they're very bullish long-term because obviously it takes a while to put the infrastructure in for a house. And then, of course, it takes a while to build the house and someone to buy it. That all said, it could be years before the land they close on obviously turns into a homeowner moving into the property. So they know, what they do know is that permits are down over the last 5 years, ever since COVID, especially, right? Last 4 years. In terms of permits being pulled and new home construction being built. And so there's a housing shortage of supply in the Phoenix area for sure, across America in general, but in Phoenix, definitely because of all the population growth that we have here. And so what this is saying is that they are going to continue to buy this land and buy home and build homes on it, to continue to try to get the housing shortage problem fixed. And people are still buying new home construction because it's still a little bit cheaper overall, and their monthly payment's going to be less due to the rate buy downs all these home builders are offering, trying to give temporary relief for the mortgage payment for a homeowner, which is good in a way. But again, the key word, temporary. And if the Fed doesn't drop rates, then it's going to not matter anyway, because it's going to adjust back up to what the fully indexed approved rate is. And that will not be good if the homeowner buys the house knowing they are going to struggle to afford the fully indexed monthly payment, whatever that rate was they were approved for. So hopefully that makes sense. But the home builders are very bullish long term, that's for sure, midterm to long term on the Phoenix housing market. But our economy has some things that we got to sift through first here, I think. And affordability issues is a big one of them. So we'll see how that all plays out. All right, we have a comment here. Do you have any specific, hello, KD0211. Do you have any specific data for the West and East Valley? Is the median house value in the East and West Valley rising at the same time? Well, you know what? Let's go live here and let's see if we can pull this off. East and West Valley median home pricing. Let's go in here and let's pull up some things here. I'll do it live in front of you guys. Go over the conference report. It is a wealth of knowledge. Let me go back to this screen here and let's pull in on a snapshot here. Let's go to large city snapshots. Now, I can pull something together for you that can bring everything into the fold in terms of the whole West Valley. But for now, let's just pick on some West Valley areas. Let's go to Goodyear. Okay. I wish I could do multiple ones and add them on. I will be able to conduct that chart for you for maybe next week. But for right now, let's just pick some of the West Valley areas. Let's go Goodyear. Here we go. Median price, $490. It's up on a monthly. On the annual is probably a little more representative because it's more of a longer term sample size. Either one, it's up in Goodyear. Okay, from $479 to $490 just month over month. It's crazy. Let's go to Glendale. Median price even $440. Okay, let's go to Avondale. Come on, Avondale. Average price. Medium home price, excuse me. Whoa, where you at? There you are. Boom, boom. Even $425 to $425 on the annual sales side. That's interesting. 2 evens. You don't see that very often. Let's go to Surprise. Surprise is a big West Valley suburb. Median price point, annual sales up from $432 to $434,995. And guys, you know the Cromford report's in real time, so this is pretty crazy. This is at 6/27/24. This is just a couple days ago. Now let's go to the East Vallay. All right, let's do Peoria. Peoria's in the West Valley. Let's do one more here. What's Peoria sitting at? Peoria on the median, we finally found one that went down. Look at that, $560 to $520. Interesting. And if you notice that, Peoria probably has the higher price points out of all those suburbs we just clicked on right here. And yet that's the one that's down. So the higher price point ones where people are borrowing a little more money and therefore a little more sensitive maybe to the interest rate. Interesting. Okay. Let's go to Scottsdale. Let's go to East Valley now. East Valley, Scottsdale, higher end here. Median price point annual sales up about $5,000, up month over month, okay, and up over the quarter. Let's go to Gilbert. Where's Gilbert? There's Gilbert down the East Valley. Median price point up as well, $600 to $625. Let's go to Chandler. Oh, that's Cave Creek. Let's go to Chandler. Chandler is up $570 to $595. Okay, let's go to Mesa. These are all median sales prices. Mesa. Median price is up. Down. Mesa's down. $490 to $489,900. Down $100. That's it. So pretty much even. And I don't know. Let's try Tempe. Tempe's known as kind of an East Valley suburb, even though it's kind of more centralized. Median price up $532 to $535. Okay, guys. So you're seeing that across the board, the median prices are up. Let's go. We did Mesa. Is there one more? Let's go to Queen Creek. Queen Creek might be. Let's see what they're at. Median price, annual sales up $480 to $485. Okay, so there you have it. There's the data. Prices continue to go up on the median side, even in suburbs where the average price points are lower in the 400s, as opposed to, like, say, Scottsdale, where it's $1 million, okay, or whatever, over $1 million. KD0211. Thank you for the question. Oh, one more here. You should also talk about rising costs of HOA in the Valley. Yeah, you know what? I'm doing a video right now, actually, that's going to touch on that a little bit. But it's not only talking about rising costs of HOAs, but thank you for that suggestion. I will maybe do a video on just that. What I'll do is take a deep dive on some research on all the HOA dues across all the different cities and see if I can't combine it to really talk about where the highest rates of the HOA dues. Now, one thing, guys, speaking of HOAs and insurance, which parlays perfectly based upon the Phoenix Business Journal article we were just covering on insurance. This is awesome. And this is something you need to know. Okay, if you're looking to buy a condo, there's all kinds of issues happening right now with condos. See, to get financing on a condo, the condo complex has to be what is called warrantable. Warrantable means that it can get financing on the project. Now, if you're going to buy it to live in, there's a lot of exceptions there. We can get spot approvals where possibly you can still get financing for the condo to move into, but you have to get a spot approval still. If you're an investor, it's very tough. Now, what am I talking about? What I'm talking about is in the situation where right now a lot of condo complexes across all of Phoenix and probably other places across America, but I can't speak to that, definitely across Phoenix, are becoming non-warrantable. Why? Because of the rising cost of insurance. See, insurance has gone up dramatically, and there's certain provisions within Fannie Mae and Freddie Mac that obviously back the majority of financing on conventional loans, in which the deductible of a unit has to be within a certain guideline relative to the cost of the insurance for the entire complex when the complex goes to get an insurance policy on from some big company on the whole complex. If that deductible on a certain unit goes up to be too high, then it's not insurable for each unit, and therefore, if too many of those units become uninsurable, which they will be because it's all under that blanket insurance policy rider, the complex becomes non-warrantable. So there one of two things has to happen. Either A, insurance costs have to come down, which probably aren't going to happen anytime real soon, or B, the lending guidelines have to change. Now, there's a rumor out there that Fannie and Freddie are actually looking at this right now, and that they are going to move the goalposts on their guidelines to be able to allow for a higher deductible per unit on the insurance policy that is offered through the condo complex and the HOA dues, okay, to be able to then get financing. It needs to happen. Otherwise, the market values of a lot of condos across Phoenix are going to start sliding, because as people sell, there'll be a smaller buyer pool that will be able to afford buying in there, because it will eliminate a lot of investors unless they want to pay cash. But a lot of investors may shy away from it because they might say, well, yeah, I can pay cash and buy that condo as an investment. Rental rates will probably still be pretty good, but the value might slide, because if the Joe Schmo, regular mom and pop want to buy in there, they may not be able to unless they can get a spot approval because they want to move into it. So it just shrinks the buyer pool, supply demand, 101 here. So interesting, right? Hopefully that all makes sense, but it goes back to your question on this KD010211, because that causes HOA dues to potentially go up because the cost of insurance goes up, and the HOA provides a blanket insurance policy in most condo complexes as part of their HOA dues to the condo owner. Hopefully that all made sense. That was a diatribe, but call me with any questions. I love to, I geek out on this stuff all the time, try to provide little nuances and value to people that we're talking to and advising when it comes to buying or selling real estate in the Phoenix area. 480-660-5974. 480-660-5974. Okay, back to my screen. I'm going to share it, and we're going to do a few more articles, and we'll be done. Okay, so here we go. Share my screen really quick for you guys. Okay, all right. My view. Here's how to assess the pros cons of Arizona's new housing bill, HB 2721. Okay, now what does that mean? This is the thing we've been talking about, the bill that was passed by the governor that states that now certain suburbs in Maricopa County, if they have populations over 75,000 people, now have to basically allow ADUs to be built on the parcel of land that already has a house if the owner wants to do that. Interesting. Again, trying to create more supply, trying to solve the housing issue of shortage of supply. Therefore, they figure if they can do that, then obviously affordability might be better. But guys, one thing that I think a lot of politicians are not taking into consideration enough is that it's not just the lack of supply. It's the fact that people aren't moving. Why? Because a lot of homeowners, I mean, it's like we went through this, about 79% of all homes owned in America, 79%, and you round up, I think it's actually 80, like 79.6, right? Of all homes owned in America are owned by somebody who owns it free and clear or has a mortgage interest rate of 4% or less. So they're not incentivized to move when the rates stay up here, but yet the Fed is caught in this quandary because they can't bring the rates down too soon, because then people start doing, buying and selling, and then values go up. So it's almost like they have to keep the rates high until the housing supply can be more and more plentiful, so that it doesn't do a one-way swing on the pendulum again. So it's interesting to see how this is all going to play out, guys. But if you look at it that way, then you probably are going to be more bearish on the fact that rates are going to come down much anytime soon. Now they could. There's all kinds of things that could affect that, right? But right now, inflation's not going anywhere. It just isn't, guys. They can sit they can sit there and say the CPI is decreasing by a percentage point or half a percentage point, whatever. And honestly, at this point, I don't know what to believe, because it appears that the Bureau of Labor Statistics that tracks the CPI, they can take one thing in or one thing out of that number, not even tell you about it, and say the CPI went down by a half point or whatever it may be. When in reality, the price of bread actually just went up. The price of eggs, milk, your groceries just went up. And at the end of the day, that's what matters. It doesn't matter if the CPI says it went down, whatever, a point or a half point or whatever. It doesn't matter if when the consumer goes to the grocery store and they are paying the same amount or more for their goods, their dollar went less. Okay. And it's not just food, it's multiple other things too, as well, right? Utilities, and the list goes on and on. So, and what really sucks, guys, just the high tribe here, the sidebar, what really sucks is that the average American thinks, I believe they think, that when inflation hits and prices go up, they go up and they sit there and they go, okay, now inflation comes down, they're going to drop back down. No, they don't. Gas does. That's about it. If you look at it, most consumer goods, when they go up to this number, they kind of plateau out. Inflation reading or number or metric comes down. Prices stay right about here. They just don't go up for a while. And then when the consumer gets used to hopefully paying this, and then it goes back up. And also too, as long as they keep doing, what they're doing here in terms of spending money, because that's the definition of inflation, too much money chasing too little goods, it's going to be hard to get that inflation number down. So again, sidebar, but let's go back to the screen and let's finish off this YouTube live, because we're talking about the ADUs. And you can see right here, guys, the ADUs, right? This is interesting. You got pros, promotion of housing diversity, increased housing supply, urban infill development, zoning reform, etc. Housing affordable access, hopefully. Cons, neighborhood character and aesthetics are going to be changing. Infrastructure and services strained, potentially. Parking and traffic, because now you don't have garage spaces for these things, right? Or even driveways, potentially. So the person just parks in the street along with everyone else who has ADU on that street. That could be interesting. And community resistance, right? The NIMBY, which is interesting. Not in my backyard. That's what it stands for. So that's what a lot of people think, right? And that's like a thing. At least in Phoenix, it is Arizona. So there's a land attorney and yada yada. So you guys get the point. Okay, let's move on. All right. One-time housing hotspots now seeing price cuts. Where are those housing hotspots seeing price cuts? Well, this is cut down to the chase here, and there's the metros with the lowest home sales price growth here recently. Northport, Florida, Oklahoma City, San Antonio, Texas, Austin, El Paso, Memphis, Tampa, Salt Lake City, Omaha, and Charleston, South Carolina. So if you want to go buy a place, apparently in those places right there, you might have a little more negotiating room than other places across America. But it does talk about the Sun Belt and how the Sun Belt is slowing down in terms of, this rapid appreciation. So again, for all the naysayers out there that are saying, hey, the housing prices are not going to keep going up, they're going to come down, you're probably right, because everything is cyclical. To what extent? Who knows? But all I've been saying on this channel is following the data. And the data has been that prices have continued to rise, even though it feels like they should be coming down due to simple economics, supply and demand. But it's going to change, because everything does change. It's cyclical. It goes up, goes down. So here we go. Back to my screen. All right. I kind of like this view here. Okay. Let's go here to a few development things and then we'll be done. All right. Hey, KD, looking at Tampa, Florida, or Austin, Texas, median price going down. Do you see similarities with the Phoenix market? Higher insurance costs, higher HOA, higher inventory. I do. I do, KD. That's a good question. At the end of the day, if you ask my opinion on this, my opinion is not a rosy outlook that, oh my goodness, the sky is not falling. No, I don't think the sky's falling. I'm not Chicken Little here, because that's not necessary to just panic and make people fear. But the reality is, you gotta look at the data. And I don't think this is sustainable. Now, I do think that it's going to be minimal, and that may not be a popular opinion. But again, I'm just looking at the data and analytics. I look at it every single day as part of my job. It's more than just, being a normal realtor that opens up doors and, writes a few contracts. And so I want to be a marketing, not just a marketing advisor, but a real estate overall advisor, a market advisor. And an advisor knows his numbers. And I look at it and I sit there and go, well, based upon the amount of companies that are coming here, that have been coming here, that are applied to be coming here, that have filled out applications with Greater Phoenix Economic Council, the GPEC, right? It's staggering. I mean, it's well over 200 right now still. And a good amount of those are international companies, right? Looking to bring divisions or even some of these corporate headquarters. So Phoenix has a very bright, rosy outlook on the economy side, the economic side. It no doubt does. Jobs, TSMC, etc. So very rosy outlook. And so I do think that although the real estate market is cyclical, it will have to adjust, and it's going to adjust. I think personally, maybe not as much towards the end of the year, because I think with the presidential election, you're going to see a lot of flatlining and potentially even maybe a bump, because I think, politicians like to get reelected. That's just how it is, no matter who they are. And so I think you may see a little bump of some goodness, some good stuff happening, right? Due to rates coming down a little bit or whatever it may be. End of the year, but I think it's going to be short-lived. I think looking in 2025, you have a situation where the price will probably have to adjust a little bit. I think you're going to have more supply being built. You're still going to have a lot of buyers on the sidelines waiting for that right time, which I have a whole other opinion about that. And then in 2025, it could be interesting. I think in 2025, you can see rates come down, but not because the Fed just goes, oh, inflation is under control, let's drop the rates. I think in 2025, there's a scenario, a more contrarian view, a scenario in which you see rates coming down because they have to. There's no longer a choice, meaning there's a small recession, right? And the rates have to come down because now literally you don't want it to go into a major recession like in 2008 and 9, which I don't think is going to happen. But I think a small adjustment, which you may call a recession or not, I don't want to put words on it, but a small adjustment to everything is necessary and probably will happen when you look at everything that's going on in our country and our world. So that's my thought. But I do think I'm very bullish on the mid to long term, especially for Phoenix. So I just think because of the basic supply and demand model, you're gonna see a healthy market, midterm to long term, especially. But that's my crystal ball. We'll see what happens. So, the best thing is just to take the data and act as you could. You don't know you're at the top of the market, and you don't know you're at the bottom of the market until you're actually out of it, out of both, either one. So the people who try to time it perfectly are the ones who always typically are behind and get burnt. So just work with what you have with the best information at hand and make the best decision based on data. And when that happens, typically your timing is pretty good, even though it's not going to be perfect unless you just flat out get lucky. That's a fact. Okay. So there's my thoughts on that. All right. So LG Energy Solution, guys, hits pause on second Arizona battery plant. So is this a concern? Well, it depends how you look at it. This is the first plant they're doing. They have a boatload of acres, I think like 6,500 acres down in Queen Creek, and they will be the largest employer in Queen Creek when this is all done. Their first plant is going vertical, and it is full speed, full court press on that one. But they have a second phase to their plant, which is a $5.5 billion investment in the town of Queen Creek, which is amazing. But they are putting that on hold right now. The company is expected to become Queen Creek's largest employer, creating nearly 4,000 jobs in the near future here, which is crazy. But their construction on their second phase of their cylindrical battery factory is being paused right now because why? They made a comment here. They want to see what happens to the rest of the global economy over the near term here, which there's not the first time, but there's another big company with a lot of money saying, I think we're good, but let's be a little apprehensive here and somewhat cautious. Okay. So take that for what that's worth, but there's another sign. Okay. Next article. NHL, guys. We won't spend too much time on this because those are probably not a lot of hockey fans on this Everything Phoenix Live. I don't know. I'm a fan of sports, so I like hockey, but it's not my favorite sport, but I like it. But anyways, this is kind of a bummer of article saying that the Phoenix Coyotes may not ever be coming back. We'll see what happens. They're supposed to be coming back in 3 years. Hopefully they have a new facility, a new arena to play in. And the owner was vowing for that because although the current hockey team went to Salt Lake City, they are not the Coyotes. Coyotes are reserved for the Phoenix metro area. So a new team with a new arena is supposed to be springing up in the next 3 to 5 years. We'll see what happens. But this is not a good article if you want to read into it too much. Okay, we'll see what happens. We'll follow it. And this is another thing too with the Coyotes. The land auction was canceled. This is where they're supposed to be putting their new arena right here at the corner of Scottsdale Road and the 101 in Scottsdale, which would be an amazing place to put it. I hope they come back and have it there. It would be awesome. I mean, look at that district. Oh, and there's so much land right there to develop right now, which is prime real estate. But we'll see what happens there in the future. Last but not least, guys, I want to just talk and hit on this real quick because this is interesting. Tempe's grass clippings rolling hills shines new light on golf with nighttime play. Guys, you know that Tempe, Phoenix has nighttime golf now. And especially when it's hot in summertime, because guys, let's be honest. I mean, it's still hot at night in the dead of summer, but it's doable, right? You're in the shade because it's dark, and it's cooler. I mean, mid 80s is a lot better than 110. So there's a picture of it, and it's lighted, and it's really cool. I have not done it yet. I got to get out and do it. But those of us, I think, with kids, right? We sit there and we go, "Hey, man, 10 o'clock, I'm out. Right? I'm going to bed." You know what I'm saying? Smaller kids like myself. So I haven't done that because I'm getting tired around 10 o'clock. But that's pretty cool, right? And I think more and more you're gonna start seeing more and more of that happening here in not just the Phoenix area, but across America. They said South Korea has like hundreds of nighttime golf courses throughout the entire country. It's a big thing over there, but in America, it's just kind of taken off. So we'll see how that plays out in the near future. But that's pretty cool. In Tempe, right here, you want to play some nighttime golf? That's the place to do it. All right, guys, thank you so much as always for watching our YouTube live here. If we can do anything for you, never hesitate to reach out to me through social media or call 480-660-5974. We'd be happy to talk real estate with you on any level, anytime. Thanks, guys. Until next time, Phoenix, keep it classy. See you next Monday.